What if what looks like a regulatory setback is actually the clearest signal yet that the crypto markets are entering a new era of ETF expansion? That's exactly where we seem to be today. The SEC has asked issuers of altcoin ETF filings to withdraw their 19b4 applications and instead embrace a fresh path under newly approved generic listing standards. It's a twist so subtle you may miss it if you're only watching price charts, but for those paying attention, this could be among the most bullish developments we've seen in years. Let me walk you through what's happening, why it matters, and how it could reshape which cryptocurrencies lead the next wave of institutional adoption. Buckle up, this is one of those moments where history might be made in whispers, not headlines. Over recent days, several journalists including Eleanor Terrett reported that the SEC has asked issuers of ETFs tied to XRP, Solana, Dogecoin, Litecoin, and Cardano to withdraw their 19b4 filings. On the surface, that looks like a retreat, like the SEC is putting up another barrier to altcoin ETFs. But dig deeper and you see that the SEC is replacing the old path with a new, more streamlined one. It just approved generic listing standards for commodity-based exchange-traded products, and under those rules, individual 19b4 submissions are no longer required. What's being replaced is the old dual filing, drawn-out regulatory burden, not the ambition of crypto ETF proliferation. This change matters because the 19b4 process was slow, bureaucratic, and unpredictable. Every time a new ETF was proposed, exchanges had to file a 19b4 to amend rules, wait for comment periods, then await SEC review, sometimes months, even up to 240 days. The new generic standard allows exchanges like Nasdaq, NYSE Arca, or CBOE-BZX to list qualifying crypto ETFs under a rule once the product meets specified criteria, without needing fresh case-by-case approvals. In effect, the SEC has removed a gate. Now the decision becomes more about whether issuers meet operational, custody, and compliance criteria than whether regulators are willing to start the conversation. So what about those altcoin filings like XRP, SOL, Doge, LTC, ADA? Their 19b4s were deemed unnecessary under the new standard. So instead of treating the withdrawals as defeat, view them as reset. Issuers will now focus on updating their S1 registration statements, the core document detailing fund structure, risks, operations, and wait for approval under this cleaner, faster framework. As one Bloomberg analyst said, this means ETFs could be approved absurdly fast. Let's consider the timing. There are looming deadlines in October for many of those altcoin ETF applications. Terrett reported that Litecoin has a deadline of October 2nd, Solana on October 10th. With others close behind. Under the new framework, those deadlines lose much of their pressure because the regulatory process is decoupled from the old 19b4 clock. What matters now is readiness. But that readiness also gives the SEC discretion; it can approve or delay as it sees fit. Nate Geraci, president of the ETF Store, warned precisely that. This change also fits a broader narrative. The SEC is signaling that it's ready for more altcoin ETFs, not less. Reuters reported that after the rule change, asset managers rushed to update filings, expecting a flood of spot crypto ETFs beyond just Bitcoin and Ethereum. Under the new regime, the maximum review time could shrink to 75 days from 240 days. That's a quantum leap in speed and predictability for crypto products. Instead of endlessly waiting, issuers can push live faster if they check all boxes. But every major change brings questions and uncertainty. Will investor demand match the regulatory opportunity? Will custody and audit systems scale? Will some coins qualify while others stall? These are the tensions that could determine whether XRP, Solana, or Dogecoin become institutional darlings or merely hopeful candidates. Let's walk through possible scenarios. In one scenario, the SEC approves the first batch of altcoin ETFs under the new standard rather quickly. That would likely bring fresh capital flows into SOL, XRP, Doge, LTC, ADA, even Cardano. Broadening beyond Bitcoin and ETH would diversify institutional exposure and could drive a reshuffling of crypto portfolios, not just top-tier, but next-tier tokens. That could be bullish. The shift to generic standards effectively lowers a barrier. The upside is that more tokens have a shot at ETF legitimacy. On the other hand, there's the cautious scenario: the SEC approves slowly or selectively. Some coins may get greenlit sooner than others. Those left waiting could see price pressure or market fatigue. Issuers may hesitate to invest in custody, operations, or marketing until they see reliable approvals. That's not a reversal of intent, but a calibration. The SEC retains discretion to pace adoption, letting the market adjust gradually rather than unleashing a flood that overwhelms infrastructure or risk oversight. What are the telltale signals you should watch? Look for sustained inflow data once ETFs launch, not just early flurries. Watch custody announcements, third-party audits, and the depth of trading volume and underlying spot markets. For SOL, monitor how its network usage evolves. For XRP, keep an eye on regulatory clarity in U.S. guidance and cross-border adoption in Asia. For Dogecoin, see which issuers commit to liquidity, partner integrations, or structural improvements to its network. Also pay attention to how markets price the ETF launch hype itself. Because when something is expected, sometimes the sell the news phenomenon kicks in. Investors may position early and exit quickly once approval is official, leading to short-term volatility even amid a bullish long-term framework. It's also crucial to remember the structural differences among these coins. XRP has an edge in regulatory familiarity thanks to prior SEC proceedings. Solana offers scalable smart contract platforms and DeFi adoption. Dogecoin has mainstream brand recognition and meme power, but weaker developer momentum compared to others. Litecoin is historically stable and close to Bitcoin's architecture. Cardano has academic backing and peer-reviewed development. These distinctions may drive which ETF gets traction or premium flows. This whole shift also aligns with tension in regulatory philosophy. The SEC's adoption of generic listing standards is effectively saying, we trust exchanges and fund issuers more if they comply, rather than forcing heavy regulatory gatekeeping for each product. That is a vote of confidence in infrastructure, audit, and institutional readiness. The approach also mirrors how the SEC handled single-stock ETFs in the past, under generics. SEC but the crypto space is riskier and more complex, so the SEC's caution will still matter. What about sentiment and psychology? Investors interpret withdrawals and rule changes as negative by default. Some may see delay as rejection. But savvy players will read the move as liberalization, less red tape, more scalability. That shift in narrative could drive fresh enthusiasm, especially from institutional allocators who were waiting on regulatory clarity. To you as a viewer or trader, this is a pivot point. If you believe in the long-term potential of altcoins beyond Bitcoin and Ethereum, this regulatory change pushes your thesis forward. But it's not a guarantee. You must still pick projects with fundamentals, monitor execution, and manage your risk. So here's what I think is most likely. This time next quarter, we will see at least a couple of altcoin ETFs approved, maybe a SOL and XRP among the first batch, and the rest following in waves. That process won't be perfect, but it could redefine which tokens move from speculative assets to institutionally accessible components of broader crypto portfolios. In closing, this moment is more than a bureaucratic reorganization. It could be a tipping point. The SEC's withdrawal of 19B4 filings is less a retreat than a signal. The rules for crypto ETFs are changing, giving more tokens a shot at legitimacy and flaming new competition. The winners will be those projects ready to perform, those with strong networks, deep liquidity, regulated custody, and credible roadmaps. So what do you think? Are we witnessing the birth of a new generation of altcoin ETFs, or just another regulatory shuffle? Drop your prediction in the comments. If this helped you understand what's going on behind the scenes, hit subscribe and stay tuned, because whatever happens next, it's going to reshape the future of crypto.